Happy Thursday, everybody. Welcome to our Long Verticals and Diagonals webcast. I'm Connie Hill. I'm happy that you have joined me here today. Does it feel like things are shifting a little bit in the marketplace? In the last, I'm going to say this week, things maybe are changing a little bit. We're going to take a look at that, see how that might impact our trades that we have going on, which have been primarily bullish trades, and look at some new opportunities here today. Maybe a little bullish, maybe a little bearish here as we look at those. Now, I hope you're following me on X. I'm Connie Hill CS, Barb Armstrong, who we have the pleasure of having in our chat here today. Good friend, fellow coach, very knowledgeable in the areas that we're discussing here today. She's here to help out as well. Her handle is Barb Armstrong CS. We'll post educational content throughout the week as we see different things we think you might find interesting. So follow us. It's easy to do. Let's go through our disclosures and let's get busy with our agenda here today. Options carry a high level of risk and are not appropriate for everybody. We'll be using the Paper Money software application here today. It's great for educational purposes and for testing out rules, theories, and so forth. There are a little bit of differences in the Paper Money account than in a live account. We'll point those out as those become apparent. One of which is that in Paper Money, it will never assign short options. I shouldn't say never, but it usually does not assign short options early, even though the live market certainly can do that. Past performance is no guarantee of future results. We do talk about rolling in this class. Rolling strategies can entail additional transaction costs simply because closing one contract, opening up another one, so regular commissions are going to apply even though we're doing it in one ticket. Investing involves risk, including the loss of principal. When we place stop loss orders, if we have a market order attached to that, keep in mind we're not guaranteed what the price might be. We just have an idea of where we want it to trigger off, but we might get filled at a little bit different value, depending on what the rates are at the time of the placement. All right. We've got a lot of ground to cover today. I want to talk about these shifting markets a little bit, what's going on. Maybe feel free to enter your comments, okay, in terms of your perspective. We've got several positions we need to manage, and then I want to get into some new trade opportunities. Let's start off first by just taking a look at the SPX, maybe what might be going on there. And it's interesting because we've been following this sideways price action for a little bit here. And on one hand, we were seeing that it looked like possibly there could be a head and shoulders pattern forming. Okay, it's a reversal pattern. Here's a shoulder. Imagine you're just kind of looking at somebody's profile. Their head always goes higher than the shoulder. We look for the second shoulder. It could be a little bit lower. It could be a little bit higher. It's okay. And then sometimes we see second shoulders. And I kind of would say this is a second shoulder going on here. And basically it's showing us a pattern that maybe the momentum, the bullish momentum we had is finally weakening a little bit and not as strong as it used to be. Now, what we're seeing today is a drop below the 20 and the 50 period moving average. Now, it could, the S&P could maybe fall through this area here. This is what we call, it's really not very good. Yes. Okay, looks like we had a little bit of a technical situation that I need to correct here. We're going to go back to our disclosures for just a moment. And let me get the right page. Oop, we should erase our shoulders and our heads here in the disclosures. And just need to get a quick look at these disclosures. So just keep in mind what we're talking about is for educational and informational purposes. It shouldn't be considered a recommendation of any sort. There's some differences in Paper Money, which we will be using here today, and the live market. I'll point those out as those become apparent. This investing involves risk, including loss of principal. Okay, now we're going to head back to our S&P chart. So we have what's called a neckline. And then basically we look at the little dips here between where our head is and maybe where that shoulder top might be. And really we're seeing this line here. It could be some diagonal support that we see. It could be a neckline. And when the neckline is broken, that would be a key to go bearish if you're following that as a technical trader and following that pattern. So we might not be completely turning things towards bearishness, but being below both those moving averages should be concerning to us, especially the 50. Okay, now the 200 is clear down here, and so it's nowhere close to that area. What about the NASDAQ? Let's see, the S&P is down 1.39% right now. NASDAQ looks like it's down even more, about 2% here today. And it definitely has been below these moving averages for a little bit. So definitely seen some bearishness going on here that we might want to take advantage of. Now I want to set up a couple of new trades based on current market conditions. And then I want to go back and review, because we have a lot to talk about, of our current positions. Okay. Let's do this. Let's go to, I want to bring something up here. It's a crude oil futures chart, and not so much because we're trading the futures, because we're not in this class, but it's giving us an idea of what's going on with, in this case, the light sweet crude oil futures, basically oil and energy. What is going on? And as the war seems to have escalated back over the United States and Iraq, or Iran rather, it looks like the pullback that we had seen in oil prices is no longer here. In fact, it's moving its way back up. Now I had a Fibonacci drawn on here. Probably I'd need a 6-month chart here so you can see where that's, well, that is a 6-month chart. Let's go to a 9-month chart so you can see it a little bit better. All right, looking at kind of the high point here and the low point on oil. In any case, it's starting to recover. And as we're seeing that happen, we know that it weighs down on other areas of the market, okay? Even though crude oil might be going up and there might be some bullishness in some stocks associated with that. Now, one stock we're going to take a look at here first, and I'm going to go back to our 6-month chart here. Let's see, let's start out here with ConocoPhillips. Okay, ConocoPhillips is one. Doesn't that pattern look really similar to that crude oil chart? Had this pullback here when things looked like they were settling down as far as oil prices went. And then it's following a very similar pattern here. Now, what's interesting to me about ConocoPhillips here is I drew in a diagonal resistance line that is, I'm going to say, generous, meaning it could have been, we could have come along something like a line like this, in which case maybe there was a breakthrough a little bit sooner. This one, looking at a little bit more broader angle here, definitely seeing a breakthrough there of that diagonal resistance. And so some traders might look at that as a potential entry for going long or being more bullish here on ConocoPhillips. So let's stake out a position here. And there are, on our liquid options watch list, there's quite a few oil and energy type stocks. So ConocoPhillips is one of them. Devon Energy is having a very similar look, although it looks like maybe it popped through there yesterday on its. But let's go back to ConocoPhillips here. Really widely traded, for 1.4 million shares traded so far today. We've got our weeklies up here. We, in this case, are just going to go with the 21 August. Why are we choosing that one? It's kind of in the sweet spot of where traders that are trading verticals time-wise like to either buy or sell anywhere from 40 or 20 to 40 days worth of time. Sometimes we go up to about 50 days if we need to. This just gives us about 15 strikes here. Now, on this one, you probably don't need all that information. We have the open interest showing over here on both sides, but I'm thinking on this one, we're going to be a little bit more on the bullish side of things. And I was looking to do here a vertical. Now, stock shifted a little bit here. We do now have the single dollar increments available here. And we're gonna, let's see how this is, if this still pans out for us. So I was looking at doing the 120, 125, because that's where we have the majority of the open interest. So if we put together a vertical, we're definitely looking for a directional play here. And let's go down and pick our 125. Let's see what kind of a credit we get there. So on a $5 wide spread, we're looking here to spend $238 in order to have a potential maximum risk, more than that actually, because it would be $5 minus, I'm gonna maybe just take it to 240 because it's jumping around here on us a little bit. So maybe we're risking 240 to make 260, okay? Which is a little bit more than 100% return. Now, what does the stock have to do? It's got to go above 125. Let's see how close 125 is. If I put my mouse up in this area, we definitely need it to move. Okay, so it is definitely a directional play, and that's where we need it to go. But it's already, well, it just has about $3 more to go, and we have a little bit more than a month for it to go, 29 days. So it's not asking a lot of the stock to make that kind of a move based on what's been happening the last few days. Now, should there be a surprise close to the war, that could impact a position like this, right? Because it could just drop again. But right now, the heat's on, and that's kind of where it stands. Now, Chris is letting us know here in about 2 weeks, ConocoPhillips will have their earnings, and it's just right here. So yeah, on August 6th. So do we want to be cognizant of that? Yeah. Is there a possibility we could be out of the trade easily before then? It could, if the momentum continues. We don't know if it will. But I think you're right there, Chris. We want to make sure that we're not going to keep this trade over earnings. Now, the 6th of August will be, see what day of the week that'll be. That will be on a Thursday. So that'd be 2 weeks from today. And let's see if it's in the morning or the afternoon here. Want it to balloon out. Let's maybe give our time a few more bars here. Let's actually go with 20 bars. So we'll be seeing a full month out. Let's see what time they're saying they will release it before the market opens. So we would not want to wait till our class on Thursday when we get together on August 6th. We would want to be out of it by the 5th, because otherwise we'll be going through the earnings period. Now, some people like to trade over earnings. A specific trade, we probably don't want to trade over earnings, okay? We want to probably not have that risk. See if we can get to a target that's reasonable. Now, I want to propose a couple of different targets here. You're just kind of looking at the technicals of this stock. You know, I'm looking at it, maybe it could make, we definitely want it to go to 125, but in terms of a target, maybe something a little bit short of 130. I was looking at about 128, which would be about right, pretty close to where my mouse is there. Okay, kind of in that area. So let's put in two targets, one based on, say, getting to $128 on the price of the stock, and the other being a profit target, which we do frequently in this class. That is, if we get a majority of our profits out of the trade, we would just want to take it. We're not going to try to get everything out of it. So today, the magic number is going to be 65%. Now, you may have a different number that you like to use to correlate with that. That's fine. You can do that. So this is how we're going to structure this trade. We're going to do a first triggers, one cancel other. So that our buy order has to get filled first. And we're going to create two opposite orders. Actually, before I do that, how many contracts can we do? Let's get our number of contracts in here. In this class, we'll allow ourselves to risk $2,000 on any trade. Okay, let's bring over our calculator here. If we know we're risking about 240, we'd take our $2,000, and we don't want to lose all of that, but that is going to be our maximum position size. And we're going to divide that by 240. We could do 8 contracts. Okay, we've got the liquidity there. That's nice. We're going to do, is that a 4? That was a 4, right? No, it's an 8. We're going to do our 8 contracts. Okay, now we'll set up our opposite orders. I wanted those contracts in there first. So 2 opposite orders. Create another opposite order. All right. Let's make the first one be based on the target we had in mind, like up at that 128. Make sure that's the right number. I think it is. This is going to turn into a market order. And we're going to put it good till canceled, and then we're going to put the price of the stock. So the first target's going to be based on the price of the stock, going greater than or equal to, and I'm just going to use the round number, 128. And then just kind of check the verbiage down here. Make sure you've got your plus and your greater than and less than sign in the right area. So this is a greater than or equal to 128, and that's what we want. Now, this second one is going to be based off of 65% of our max gain. All right. So on this, if we take 260 times 0.65 for 65%, that gives us about $1.69. Let's add that to 240. And so we'd say, okay, if we could get, we're going to raise that to 410. Okay. Just kind of have some nice round numbers. Then we'd be happy. We'd say whichever target it hits first, great. We'll be happy to get out, take that profit. One of the advantages that we might have with having a price target in mind is maybe the trade gets up to that point, and maybe we expect that it won't go much further than that. That might be an area of resistance. Well, in that case, then we'd be probably happy to get out because we don't even have 65% of our gain. Maybe it only goes up to 50%, right? And so by having those couple of targets in there, and you don't have to do this on every trade, we're just going to practice it here today. Okay, that would be the purpose of doing that. So let's go ahead, let's hit confirm and send. And whichever of those triggers first, the other order gets canceled immediately. Okay, we don't want another order waiting out there if we're done. So that it makes sure to cancel whichever one doesn't get executed. And we're going to put this in our diagonals along verticals class bucket. And we're going to watch that. Now, I wanted to make sure we had answered questions along the way. Sam's got some commentary there. All right. Seeing if there's anything I've missed over here. I think we're in good shape. All right. Next up, let's take a little bearish position. Okay. Talked about some of the weakness. We've got lots of stocks to choose from. One I was eyeing earlier before our class was Google. Now, why Google? Well, it's part of the Mag 7, but right now they're kind of the Lag 7, right? They're not performing so well. In any case, we just look at the price action going on here with Google. You know, these lower lows, lower highs, and then look what happened yesterday or earlier this week, I should say. It closed below what? The 20-period moving average, the blue one. It was already below the 50-day moving average. And then today it dropped through that 200-day moving average. Now, sometimes we do see stocks bounce at about that 200-day moving average. Sometimes value investors will look at that and go, oh, it's a bargain now, better go buy it up. And that can happen. And the day is not over. So we don't know for sure that it's going to stay closed below that 200-day. But you go back and you go, well, how far could it drop? Well, maybe the next support level that it sees here is down about 295. So, you know, moving from say 316 to 295, about a $20 move. That's significant on an option trade here. So, and of course, their earnings were last night and they disappointed, right? So earnings are out of the way now. So we're going to put those in. All right, our ConocoPhillips just filled there. Good. So we're going to have two targets here on Google. We're going to put that target around, we could do a little bit higher than 295, so we're going to go 296. Okay, and we're going to do the same thing. If it hits 65% first, great, get us out. If it hits 296 first, then we'll get out of the order there. Okay. Now, it does have weeklies. Some of those fall in the range that you could consider if you wanted to go a little bit shorter here. I kind of like working with, something similar to around 30 days, something close to that. In that range, we're still working with the 20 to 40-day range that's ideal. And so as we look at it here, we've got some $5 increment options. And then recently they've added in the in between. So between 320 and 325, they put in the 322.50. Now it doesn't have a lot of open interest here. So we'll probably try to stick with those that have a great deal of open interest. Stocks at 316. So our at the money strike is going to be 315. Now, if we wanted to go 310 to 320, that would be a more conservative trade. 315 to 325 is going to be a little bit more aggressive. We're going to, actually, in this case, we just go 315, 320. So let's just look at that $5 wide. We'll keep it at the $5 wide. If we, except I'm on the wrong side of the page, let's come back over here to the put side of things. I was still left over on my call side of things. All right. 317. So I was saying 315 was our at the money strike price, and technically that is the closest one. However, let's look and see if we did maybe 320, 310. Let's just kind of look and see what that might look at. And that would be spreading it out by $10 this way. So let's drop that to 310. Just lock that in place. So in this case, we'd risk 470 to make what? 530. 530 would be our max theoretical gain. If you wanted to do a shorter spread and not require as much movement out of the stock, now we're thinking it's going to drop below 300. So maybe it's not a big concern. But if you maybe were working in a smaller account and you wanted to do, say, 315 by 320, you could consider that. Okay, you'd have a smaller net debit, which might position size a little bit better to your account. I don't mind spreading it out by 10 here. Okay. Sam says we've got some negative cash flow going on Google for social, going on, and I guess, and maybe just social media in general. Sam says they really beat earnings even though they gapped down. So the market didn't apparently like everything they had to say, right? Sometimes it can just be one little teeny thing that analysts don't like or markets don't like, right? So even though they did beat earnings supposedly, I'm going to believe Sam. I didn't read anything yet on this one. I'm just looking at the price action. All right. We're going to risk 470 per trade here. How many contracts can we do? We'll take our $2,000, what we can risk in any trade, divide that by 470. It says we can do 4 contracts. So we're going to go with 4 contracts. We're going to do the same thing here. We're going to do a first triggers OCO, and then we'll put in our 2 opposite orders. So create opposite, create opposite. Let's do the first one the same way. Let's put that based on reaching that 296 price. Okay. So that means we're going to make this a market order, good till canceled. And let's go base it on the price of the stock, not necessarily dropping all the way to the target, but maybe a little bit above it. So we're going to want to see Google get less than or equal to, make sure I'm using the right number here, 296. Okay, so just kind of breaking through that 300 threshold. It could be that it bounces at 300. Sometimes we see bounces at even numbers. So it could be that possibly it bounces there. Let's make sure our security is less than or equal to 296. And then on this one, let's make it be 65% again. Okay, so let's bring out our calculator here, see what that needs to be. If we have 530 to potentially gain as our total max, let's take 65% of that, which is 344. So to 344, let's add 470. Gives us a value of 814. Let's round it to 815. Okay, just some nice round numbers there. And we're going to make this one good till cancel. So again, hits the first target, great. It kills the second target. Just depending on where it goes. Now, both of those are assuming that it does what we want it to do. Both of those are assuming that it drops. It's not guaranteed that it's going to drop. Yeah, it's dropping right now. Some of you might even feel more comfortable, and we could do this in another class, putting on 3 targets, and that third target could be maybe a stop loss. You know, a stop loss maybe if it closes back above the 200-day moving average, or maybe an area that you think is acting as resistance. You know, we could do something like that. We won't do it in this particular order here, but just keep in mind we could do that if we wanted to. Thinkorswim's really flexible as far as allowing you to do a lot of different configurations. So let's take this. I think things are in order there. Sometimes it's helpful to read your order before I send it through. I catch mistakes sometimes by doing that. We'll put it in our class bucket, dynamic diagonals and long verticals. All right, see if we get filled on that one while we're moving on here. Kevin's saying, you know, maybe the big cap expenditure was the big thing in the Google earnings. Because that's what we're noticing, right? We're seeing the capital expenditure and it's so enormous, but we don't really know what the payout's going to be as an investor to that. And so that could be weighing on a lot of stocks, and that certainly could be the case with Google here. MBH says Google has been challenged by the UK to pay billions of dollars for antitrust violations. Anytime there's a lawsuit, something like that, it's always concerning, right? And so it can cause some jitters among investors. CB wants to know if we added that stop loss as an OCO that I kind of theoretically mentioned, how would we configure that? What would that look like? Let's just do this one more time. We'll set it up. We're not going to put it through. Okay, we would say buy our vertical. We'll just leave it at 1 contract. We're just doing an example here. And let's lock that in. And what we might need to do is determine, okay, where would the stop loss, where would we want that to be? And so let's just theoretically say, if it goes a little bit above the 200-day moving average, maybe we're seeing that bounce effect. Okay, so maybe we put it, I'm going to throw a number out here, 328. Okay, just as a, for example, that would give the stock about $16 to, well, no, I guess about $12, up $12. And then the configuration of that, what it would do is would set it up like we did here. We'd probably do this. We'd probably say first triggers OCO, create those opposite orders. And then in one of the orders, we'd have to configure it to be on the one where we're putting in the price of the stock, say on this one. And let's put it GTC here. Go on, GTC. And if we came over here, then what we could do is we could put in, okay, if the price of the Google gets down to where we think it's going to, or would like to see it drop to that support level at 296, we could put it there. Then we could also put this here, or it gets greater than or equal to 328, then we could build it in that way. Okay, so you could still do a first triggers OCO and then put that third condition there. Maybe we'll spend a class time on that, building that and practicing doing that. Okay, hopefully that helps, CB. All right. Next up, we've got to take a look at our positions we're managing. We've got several diagonals. We've got a lot going on. So as we come over here to the monitor tab, I forgot to close up all the different distractions here. So let me close up the distractions so that we're only focusing on these positions. We're going to do Pan W last. AMD was a long vertical we got into last week. And earlier it was doing quite well. We can see it was actually up on the day, and we can see it started pulling back here. We've got 29 days in the trade still. We've got a profit target out there. Oh, now it's going negative on us. So what do we think's maybe going on with AMD? It's probably selling off right now, right? And maybe let's change this to 3 months. So we just kind of are zooming in on the current price action. So we got into this trade here. It was bouncing up off that 20 period moving average. And currently it's still above that moving average. It ran up, it pulled back, and then it was just putting itself into profitable position again just recently. Now we are seeing a little bit of weakness in it today. Earnings are August 4th, and so we want to be out by then. We're going to let it play out. Okay, there's a little bit of maybe some seesawing up and down a little bit. That's to be expected. But where would we say, man, we are wrong on this trade, or this trade is the dynamics of the trade have totally changed on us? We'll probably look at something technical. We could look at a close below the 50-day moving average, although last time it went below it, it just popped right up and went up again. So that could be a consideration. We could say, well, where was the most recent low, and use this candle? We could do something like that. Because we're going to watch it every day. We're not going to just ignore it. Okay, but let's let it continue to work. All right, this one definitely needs some assistance here today. CrowdStrike. Again, it was another long vertical. It's got in the same day as AMD. And similar thing, pulled back a little bit, then went racing up. But in its case, it started to pull back here really strong today. Closed below the 20, which is not a big deal. It's still above the 50. But the concern here is that it crossed below this diagonal support area. And it's kind of held that support for 6 weeks. So could we be justified in saying this trade is not working out like we thought it would? We should close it up. It's kind of the train of thought I'm on. Okay, if you have different thoughts about it, like you're like, no, I think I'll let it wait till it comes down through the 50. Absolutely, you could do that. I think based on this close and kind of a lot of selling off in the technical stocks, this thing is kind of getting wrapped up into that. So on that one, let's see, CrowdStrike. We're down about 31% on it. So the trade is not going our way. And it really hasn't been for several days. Right now, we're down about 560 on the trade. I think it might be best here to just cut our losses. Some trades are not going to work out for us. It's unfortunate. That's kind of how trading is, right? So, okay, Bogus says, I'm done. Eric says, bell, 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 get out of there, right? Yeah, it's time on this one. So let's go to our CrowdStrike. We can get $1.50 out of it. Let's get $1.50 out of it at least, right? Minimize our loss there. Let's see if we can get filled at that 150 midpoint price. All right, we are out officially. All right, next one here. Let's look at Merck and Phillips. It's called Phillips Morris these days. Altria, that's what it's called, Altria. We put on, last week we were focusing a lot on our diagonal trades. And so we looked at our unusual, our traditional and non-traditional diagonal trades. These were more in line with what a typical diagonal might be, okay? So Altria, we've got the long 75 call there, and it's gained in value for us, which is nice. We like to see that. And then as far as our short leg goes, we've only got 1 day left on it because it expires tomorrow. We did that intentionally. We got 34 cents from it, and we can go buy it back now for about 11 cents. We're not always going to get every little penny out of these, and we don't plan to. But it's nice to see that this short leg, actually both legs went the way we expected them to. Let's look at the stock here. We go to MO. I put a line up here where our long leg is, which is at 75, because that's where peak profitability is at that peak leg. And so earlier in the week, it was actually looking a little bit nicer because of that. Okay, looks like now maybe it's bouncing off the 50-period moving average. Was down a little bit today, but looks like it's recovering there. So we want to extend the trade. It seems to be working for us the way we want it to, okay? And we would love for that longer leg that we have more time on, would love for it to increase in value. If it's bouncing here right now, then it is likely to. Let's sell, let's roll this, okay? And really all rolling means is closing out one leg, getting into another. In this case, would be buying back the 74 call, and then we'll be selling something else. Let's figure out what our other sell is going to be. Let's go out to the next week. So we'll go to the July 31s. And let's see what our choices are. It's nice we have some single dollar increments. So our long legs at 75. And we don't have to sell further out of the money than that. We don't have to do that. I'm kind of liking this 37 delta here, 74, giving us a little bit more premium. Initially, when we set this up, we did go further out of the money on it. And we could actually do a 75 here. That turns it more into a calendar where we have the same strike prices. But let's go ahead, let's roll this to 74. And I'm just going to make a little note of that. So we're going to come in, we're just going to line our mouse here on the one that expires tomorrow, create closing order. We don't want to do everything. We don't want to close out the whole trade. We're liking how it's working. We just want to extend it. And so we're going to choose this one here. Oh, I did this wrong. We want to do a rolling order. I picked the wrong one. All right, let's try this again. Create. Oh, it doesn't want to do a rolling order. What's going on here? Let's try this again. Huh. Our rolling order is grayed out. I'm not really sure why it's grayed out. Okay, it's going to let us pick it. Okay, so we are, except that's the 75, and we are short here. Really short the 74. So we want to buy back the 74. So let's change that to 74. And we want to sell a new one. This is really different, isn't it? Okay. We want our 70, our one we're buying back is actually for the ones that expire tomorrow. So we need to change this to July 24. Okay, that's the one that we're buying back, right? That's the 74, expires tomorrow. So just making sure we're buying that one back. And then we want to go out further. We don't want to go out to August 21st. We really only want to go out to August 7th. Is that right? No, July 31st. July 31st is 7 days away, right? All right, so then we've got our July 31st. We said we wanted to do the 74 here. So it looks a little funny here, but I do believe we're getting out of the right leg, 74, and we are selling the next one that we wanted, July 31st, and doing the 74 strike price. Okay, that's our order. So it kind of shows that there is the diagonal. Going to bring in a $1.03 credit. That's going to be a little bit nicer credit than our initial credit was. All right, we're going to hit confirm and send and let that position roll. Now Merck's looking good here as well. Again, it was another traditional diagonal that was long. We did calls there, MRK. Let's get that right. Our long leg here's at 130. Where's the stop? It's at 130.89. Ooh, that should be in a pretty decent position. Now, this is resistance up here. Is the position likely to bust through, or is it likely to maybe roll back down? We really don't know, but it looks like a decent area of resistance. It would have to have some really good news to push beyond that. As we look at the trade here on Merck, we're at 111. Now, if somebody was like, that met their profit target, it is a 31% gain right now. If that met their profit target, they might go, let's close the trade because it's right at that area of peak profitability. If we go to the Analyze tab and we look at Merck, peak profitability is right there at 131, and the stock is right here at that dotted line. It's getting close to 131, the short leg. I may have said earlier that it was 130, but really the short leg is 131. So it's getting close to peak profitability here. Okay, so we could either roll the leg, sell another one, or we could take profits on it. Quite honestly, this 30% in a week trade is not bad. We're going to take profits on this one. Okay, so on Merck, let's go to our working orders. Oh, I don't think we had one on this one, did we? And we're just going to close it up. We're going to say, thank you very much. We love that. And we don't want to, we just want to create a closing order. We're going to grab the entire amount. If we wanted to continue the trade, we could, okay? And we would buy back the short leg, sell another. But we're going to take the profit on this one, and we're just going to head out and say, great, we get a 30+% trade. We're happy with that. All right. Some additional requests that you might have here. We could set up an additional stop loss on AMD. We certainly could at this point. My time is almost running out, so I don't have the ability to show you that. I do want to take one moment and talk about PanW. PanW is being a pain on us, okay? And let me show you why. Our long leg is, we've been in this trade for quite a while. This was kind of a non-traditional. The short leg here, or our long leg here, is more of a hedge leg. We intend for it to decay in value. And in this case, it's gone up in value. Really, we want our short leg to be decaying. And this is one where it's deep in the money. It expires tomorrow. If we were having this situation in a live account, we could have been assigned early already. Okay. Let me show you the chart real quick on PanW. And the reason it's that long put is gaining in value is because it's just really pulled back here. Some of you might say, well, let's see if it violates 314 because that's a good horizontal area of support. That could be justifiable. Some of you might be interested in getting out altogether. What we're going to do on this trade, we don't necessarily want an assignment of the stock. So we're going to go ahead. We're going to close up this leg right now. Create a closing order on it. We're going to be booking a loss here, and it's going to be a little nasty loss. Okay. We're going to hold on to the long leg because why? Because it's the one that's actually gaining. We're going to see if it bounces here or if it breaks through. If it breaks through, we're now treating it just as a single long put. Okay, so our rules change. If we notice a sign of strength move in, like a bounce here, we'd be getting out. If we maybe the overall weakness in the tech market pushes it down, then maybe we can make up some of that deficit on the long put. Okay. All right. That is how we're going to have to end things. You guys have been great. I love that you're engaged with these strategies. I can tell some of you are paper trading them, trying to get the idea of how we might work these trades. I hope you're a subscriber to our Trader Talks channel because it makes finding our content so much easier. This was yesterday. We better do a refresh here. Coming up next is going to be investing in dividend stocks with Cameron May. That's going to be at the top of the hour, but it just helps you find our content. Barb's helping us out here today. And it looks like she's going to be doing a class here. No, that was the most popular one. I skipped down too far. In any case, you can find our content. So follow Barb and I on X, or Armstrong CS, Conning Hill CS. If this was helpful to you today, go ahead and hit the like button on the way there. The way out, there is no survey here today. And take a little break, and we'll see you back at the top of the hour with investing in dividend stocks. That'll be Cameron May. We'll follow up on all these trades next week. We'll see you then. Bye-bye.